Hello guys, today we're going to talk about support and resistance line trading. Support and resistance line trading is a very simple and effective way to trade, and many professional traders even trade only with support and resistance lines. This kind of trading goes well with Japanese candlesticks, and we did a video about Japanese candlesticks before. In today's video I'm going to show you how to draw support and resistance line correctly. Then we're going to outline some principles to use when trading with support and resistance lines. And please note that in the video today we're only going to be using support, resistance lines and trend lines. So we're not going to be finding support and resistance by using indicators or other tools. So let's first talk about support and resistance lines. What is a support or resistance generally in a chart? Support or resistance is a level that the price did a previous high or a previous low in a swing, or a level that the price failed to penetrate. These levels are important because they are printed in the minds of traders, and when these levels are reached again, traders often enter or close their positions. Now we're going to go to CTrader and I'm going to show you support and resistance level here so you understand what we're talking about. I have drawn this line here. As you can see, here is a previous swing in an uptrend that we have. You see how when the price continued, this previous high, which is again drawn here with the purple line, has held as a support. Support means that it supports the price. The price bounces off this level. So it's held once and it's held twice, and the price is still continuing. So that is the support. It means that the price is above this level and it acts as a support. And let's see now what the resistance is. I'm going to use the same level. Let's go a bit before in the chart. We see here the previous swing high in this case. We see that in the future this level acted as a resistance because the resistance level is above the price. So when the price was moving, we see that here it bounced off this level, and then again it went here, and again it bounced on this level, and at some point it broke this level and then it became resistance. This is one of the principles of support and resistance that we're going to talk about in a bit. So the whole point of this level is, let me explain before what I meant about traders, is that this level here, for example, has been printed, this 136 level, in the minds of traders. So the people who were entering long here and wanted to take part of a trend would have their exits here. Their exits are short. So, and the people who wanted to enter in this below swing, they would wait for some retracement, which happened here. So what's the point is that at this specific level, a lot of people are closing their long positions using a short, and a lot of people are entering the market using again short because it's a previous point. And that's why in this place we have a big effect. So that's why support and resistance levels are important, because they're printed in minds of traders. Now I'm going to talk about trend lines. In order to correctly draw a trend line, all you have to do is connect two consecutive lows in an uptrend and two consecutive highs in a downtrend. We're going to go to CTrader and I'm going to show you how to correctly draw a trend line. See here we have a trend, so I select the trend line tool, and all you have to do is connect two consecutive lows because we have an uptrend here. And this is a trend line that we've drawn. It's great. When it's broken, it signifies that the trend is becoming less powerful. We're going to talk about that in the future. I personally prefer to take all the prices when drawing trend lines. Some traders take part of the candlestick, but as you see, changing the price on this side changes the slope of the candlestick a lot, so it's less objective. CTrader features the snapping feature. What snapping does, it snaps the price to the open, high, close, low of a candlestick. So if I go here, you see that the price is going to snap on the candlestick. So if you want to go to the low, to the close, it's going to snap here. If you want to go to high, it's going to snap. So it's very easy to draw correct trend lines. Trend lines show us the direction and the slope of a trend. The higher the slope, the more powerful the trend. Also, you need to consider that in one trend, you can also draw smaller trend lines in the actual trend. So we can connect, for example, two consecutive lows here, and we have a smaller trend. And the same thing you can do here. So it's smaller trends inside a big trend. These are not really trends because obviously this is a trend, but these are you can trade the trend a lot more successfully. So if you like retrace and you enter here, you can be closing your positions when the small trend lines are broken, for example. An important thing to consider about trend lines is when they are broken, they often become resistance levels. This is one of the principles that we're going to mention before, but since we see here exactly what's happening, it's a good thing to mention. See, this trend line is broken, and then it immediately becomes resistance, and the price is going down again. Next technical tool that we're going to talk about is channel tool. The channels can be used in, usually channels are used in range trading, but I'm going to show you a way to draw channels that is very successful for exiting your trades. It's a technique that I like to use a lot. So let's go back to CTrader, and I'm going to show you first a traditional way of drawing channels. They are drawn in a range. So for example, we select the channel tool first, equidistant price channel, and the channels are drawn where the price is going in a range. So see here we have like a channel. They do support and resistance levels. This is a support level that was broken, and then it continues on. Channels are useful when trading breakouts also. So in this place, for example, when you have a very tight channel and the market is expecting something, you can trade breakouts. Now I'm going to show you what I meant before about drawing a channel for good exits. So we can draw our normal trend line here, and what we can do is we can go to the previous high before the trend line started and extend our trend line there, and then we have a channel which is made by the trend line and by the previous high. This is a very good exit. As you can see here, for example, it went exactly here and it retraces. I'm not going to tell you that this is some magical resistance level. It's just a good exit. It's just a good place that is high enough for you to get some money and not low enough for you to, you're still trading trends. Now I'm going to show you how we typically use a support and resistance line to trade a range. If you don't know what a range is, you can check a previous video what we explained what range trends are and breakouts are. So in this range kind of trading, I found a range here, and we've drawn our support and resistance levels. The first support level is at this previous high that I talked before, or it's this place that the price failed to penetrate again, this low, and the resistance level is here at the highest. So we're trading this area, for example. What we're doing in support and resistance trading on ranges, we're going into the places of support. Usually we use Japanese candlesticks. We already made a video about Japanese candlesticks and the kind of setups that you want to use. So for example, we see hammers or morning stars or formations that happen exactly on the support, and we enter here. Usually our stop loss is very conservative, below the hammer. That's the point of a range. It's not supposed to go a lot lower. We can put our exits. So if I enter here with a buy limit to show you, after the confirmation of this hammer, which is this candlestick, we can put our stop loss here. Then we can put our take profit. We can put it on this 73 pips. We can put it at 2-to-1 risk-reward ratio, or at 140. We can go 1-to-1 risk-reward ratio at 73 pips. Or we can do a mean reverse strategy. We can draw a simple moving average for 100 periods. And we can, in this case, it's not a good exit, but sometimes, for example, if we traded this resistance, it's a good exit to exit on the reverse in the moving average. So this is usually how we trade a range. We would trade this support the same way. Here's a clear morning star pattern that I showed before with a good confirmation, so we can enter short here. Next thing that I'm gonna show you is how to trend trends with trend lines. So we're going to go back to CTrader. We're going to go back to the place where we found the trend in the beginning. Let's remove all objects, and let's draw the trend line again. So the trend trading has a specific way that traders use. One of two more popular ways to trade trends. They either start here, for example, after the bounce here, which there is a possibility of a trend line, again with Japanese candlesticks or something. We will trade until the trend line is broken. This is a very good exit. We'll go here, we will exit here. So let's do again a buy limit. We will not put a take profit in this case. We will wait for the trend line to break. When it's broken, we're going to exit here. Our stop loss can be either conservative, which is below the candlesticks, or in trends it can be less conservative. We can even go to the previous low of the swing, depending on the trends of the style that we're trading. And another way is to trade retracements. Usually what we do here is we do some kind of a channel like this. We find the previous, like I showed you before, we find the previous high. So if we're at this spot and we want to trade this retracement, we find this as our exit. We enter here. It reaches close to our exit. However, at some point you will close the position because it's going up. You're not going to lose anyway. You can put an advanced protection or something, but still you're not going to lose. What you can do is you can, like I said about advanced protection, you can put multiple take profit levels, so you can take part of your trade in a more conservative level and then leave the rest of your trade to be closed in a higher level. Next thing I'm going to show you is breakout trading. I would like to remind you that breakouts are not supposed to be traded only on technical terms. If you just try to find all the tight spots in the chart and assume that there's going to be a trend afterwards, you're going to have a lot of failed signals, you're going to lose a lot. Like I said in many videos, the purpose of a breakout is that the market is expecting something, and that's why you have low volatility, and you have to wait for this something to happen. This something might be either news coming out, or there might be some super powerful resistance that has been tested like 5 times. And in this case, yeah, you can trade a breakout with technical terms, because if you have this kind of resistance and it breaks, okay, then you can assume that the trend is coming. So let's go back. In breakouts, let's assume, for example, that we have news in this tight spot. What you do is you draw a channel with support and resistance, and when this is broken, you can either wait for retracement back to the support. In this case, it would have failed unless you drawn the support higher, which would be very, very nice. Or you can just enter and do trend trading afterwards. Wait for some break of a trend line, or have some not conservative target. In breakouts, the whole point is that you put small stop losses and very big targets. So you can go 1 to 5 risk-reward ratios, or use indicators that will give you very high exits. You'll win a lot of money. So that's it about the trading of breakouts. Now I'm going to tell you some principles that you need to remember when trading support and resistance lines and trend lines. The major and most important principle is something that I have demonstrated already. When a support is broken, it becomes resistance. When a resistance is broken, it becomes support. It's very simple to understand why. It's a number, an exchange rate that's printed in the minds of traders. When it's broken, it's printed in the minds of traders that it was broken after some time. So when they go back to this level, they will continue with the direction of the trend, so the price might bounce back. The next principle is about trend lines. I already demonstrated again in this video, a broken trend line becomes a resistance. We already saw it in the beginning when the trend line was broken. When it reaches again to the trend line, you can trade from the other direction of the trend because it's now a resistance. The next point is that trend lines that you draw, the steeper the trend line is, so the higher the slope, the more possible that the trend line is going to break. And the more possible that after the trend line breaks, it doesn't mean that the trend is over. It means that the trend is going to have a slower slope, which is usually the case. Next principle, a trend line is confirmed at the third point. You can be drawing trend lines by connecting two low points in an uptrend to high points in the downtrend, but remember that before that trend line is tested and it bounces back, you don't have a trend line yet. You may trade the third point. I'm not saying that you shouldn't trade it, but the third point should be traded with very conservative stop loss. And the higher the trend line and the longer the trend line holds, you can start trading it less conservatively. Which brings us to the next principle: the longer either a trend line or a support or a resistance holds, like we mentioned before, the more times it tested and the price bounces back, the more powerful it becomes. But that also means that when it's broken, the more powerful the move is going to be after it's broken. Final principle, since we talked about breaking of lines, the breaking of support, resistance, and trend lines is usually up to the trader. I'm going to show you what I mean in C-Trader. Let's train again this trend line. Let's draw it again, and let's zoom into the price to the point that it breaks. So here you see that trend line is tested. What you should do if you believe that it won't break, you should be testing, like we said, Japanese candlestick formations that are exactly on the trend. However, the traders that believe that the trend line is going to break, you have some choices. You can either immediately trade here after the price goes below the trend line, but in this case, I would advise you to use very tight stop losses. Because if it's going to break like that, it's going to break with a big movement immediately. And also, you're going to fail a lot sometimes, so it's better to use tight stop losses. The more patient traders would, and what most traders agree on, is the break of a trend line happens when a complete candlestick is drawn below the trend line. All of the candlestick from high to low is below the trend line. The first candlestick like that is this trend line, so you can have a break here. Traders who are even more patient might trade immediately on the break of the trend line. Other traders might wait for the retest for the trend line to become resistance, like we said before. This is the same also in horizontal lines. You can trade it immediately, you can trade it after the full candlestick, or you can wait for the price to go back to the resistance and then you can trade it. So that's about support and resistance trading. In this video we talked about support and resistance trading. We showed you how to draw support and resistance correctly, how to draw trend lines correctly, how to trade support and resistance line, and I also outlined some principles to use and remember when trading with support and resistance levels and trend lines. In the next videos, we're going to talk about time frames, and we're going to show you some chart patterns. If you like this video, don't forget to subscribe, and also if you want, share it with your friends. So, thanks for watching.